Well, global share markets got off to a pretty good start over the past 24 hours when billionaire investor Warren Buffett announced a $5 billion cash injection into Bank of America. And Bank of America have been in a bit of trouble lately with their share price all over the show, but as a result of this news, they actually lifted by 25% in one day alone. However, other markets haven't followed suit. In fact, US and European share markets in general have fallen, and this has mainly been because some of the most respected commentators out there in the markets have been talking about the fact that the US could still fall back into recession. Now, this has really concerned investors with share markets falling back, but also a bit of a run back into the US dollar. And as a result, the Kiwi dollar has fallen back under 83 cents against the US. And early on Friday morning, we were trading just around 82.80 against the US dollar. Well, I guess the big question mark for farmers right now is what the long-term impacts could be from all this volatility and the question marks around the long-term sustainability of some of the most developed economies, particularly out of the US and also out of Europe. Well, I think in my eyes, the good news is that many of our agricultural markets are now focused on the developing economies, and this is where all the power will turn to in the future. Dairy in particular is focused on some of the newer markets, particularly out of China, and this should mean good news for the outlook for dairy. We remain positive about dairy power in the future years. However, the red meat sector is still quite focused on some of the more developed economies, particularly out of the UK and the US. Now, these could be more affected than others in future years. However, the positive news is that over the next couple of years and over the medium term, supply is going to be a factor, and this should continue to underpin prices over that time period.